How's it going, everyone? Welcome back to another Hbar update. And you can actually see in the end, we managed to test the 200 EMA, actually put in a new lower low. But the wick has been filled. And that is what I've been saying since up here at 27 cent. If you remember my videos from early this month, on this capitulation day, there was a massive bounce and everyone getting ahead of themselves and me just bringing everyone back down to reality because I want the reality more than anyone else. I want this chart to go up. I want every single altcoin to go up, but why lie? So I know there's hurdles and obstacles in the way. And if it's failing to recover them after this mega bounce, first we did dump, then it bounced, huge bounce in just one day, but failed to recover this newly formed bearish cross. The following day, dump back down. Now we can see continuation of the bearish cross. The wick started getting filled and then losing further key supports, turning them into resistance, further bearish crosses. So all of these signals, I was warning everyone on a daily basis that if Hbar doesn't recover 25 and 27 cent, it's just going to continue rolling over. And nothing that I've been saying has been untrue. Whether the people like hearing it or not, that's on them. I'm just trying to bring the truth because I want these charts to go up. But why lie? Why tell you, oh, yeah, buy now. It's going to fly, isn't it? No, it's not. That's not the reality. But we're in a situation now where the wick has been filled across many cryptos. In fact, Bitcoin went to new lows. However, if it can now bounce and Hbar actually recovers the 200 EMA, then we've got this short-term pump, a chance. Because guys, this is the final point of support in this uptrend. So we've already made a lower low of the wicks, but that's not good enough. We need lower lows with the bodies. So that, where that is right now, it needs to be under. It also needs to close under the 200 first step, under this second step. And then it's confirmed that we started a new downtrend. At the moment, this is a bullish correction from this double top. And the neckline was over here at 25, 27 cent. By losing that, you validate the pattern, should meet the target. On capitulation day, we came into the 200 EMA. That's a very key support target. And so it gave us that bounce. Now it recovered a good few levels, but couldn't recover all of them. And that's what led to it breaking down lower. And it did have this falling wedge pattern, but since breaking out, it's just bled down into the final moving average, the final support. So at all costs, 18 cent must hold. The 200 EMA at 18 or 19 cent must also hold. This is the final chance for a market-wide bounce, not just for Hbar. The issue that I've constantly said, we're worse positioned than before. And when we actually broke out of the falling wedge, right over here, price was 21 to 24. That was a lot closer to 25 and 27. It couldn't recover the moving averages. There's many. And also the level itself needed to flip into support. I've also been saying that'll just initiate a move into the final resistance. Even from here, we could roll over. So we're worse positioned now. There's now even more obstacles in the way. Here we were very close to it all. Now we're a lot further, but also from the moving averages. So it means that a move up, whether it's as shallow as the 20, the 100 or 55, or it does actually get into 25 to 27 cent, it could still roll over lower. We need to see that recovery. So it's quite a hard situation because if you want to DCA right now, and if we see that Hbar does recover all those levels and it's at a new high, you would then say, with hindsight, looking back, this is going to be the optimal entry. Remember that this is the 200 EMA. It's meant to be the bottom of the uptrend. This correction is meant to be bullish. Even though there's these bearish crosses, easily recover the levels that need to be recovered and it's bullish again. But they are there, those bearish signals, and they cannot be ignored. What I mean by that, it's we can't be foolish to believe it's just going to do that, right? It's most likely going to reject the moving averages. That's what it's been doing the whole way down. It's been respecting them. Why should it not respect them anymore? You see, it's been respecting them perfectly here as well. So we need them to stop. We need them to push through, but I don't think it will push through all of them in one go. We need to get up into here, reject and put a higher low, higher than the last low. and then push through the next. But what if we get rejected at the next again? We can't lose this area at that point. We have to continue through. Same, every high or low that we create, we can't lose. So if we want this area, 18 to 19 cents to be the bottom, the moving averages here need to be recovered. Let's just give the prices. They move every day, right? So I'm just going to tell you the 20, the 100, and the 55. Have them on. They move every day, but right now 22.5, 23.5, 25. So we need the 55 recovered. You can see at the point of doing so, it's above all moving averages. It's turning the lower end of the red box into support, trying to break 27 cent, start to move up into there. Warning that it could still lower high and collapse from there, but that needs to turn into support to continue higher. That is it from me today. I'm going to keep updating it as it develops, but right now, remember, this 18 to 90 cent must hold this week, today, must hold today for the daily candle close. I'll update it tomorrow, but as long as it does so, the next move is actually back up. We're looking at the moving averages for areas it could fail and roll over again. But ultimately, we need the same thing that I've been saying for weeks. We need 25, 27, 33, and 36 all reclaimed. And then at that moment, everything, all the bearish possibilities go out the window. So at that point, it's completely bullish, nothing standing in its way. It's a guarantee that we'll see $1 plus at the point of breaking 36 cent. Until then, we can actually pump up to there and still head to new lows. That is just how it is. That's TA. That's how it works. You need to invalidate the probabilities. It's all probabilities here, and they are high while under 25, 27 for a move up into there to be a rollover and lower. That's how the probabilities are. So that's it from me today. Any further updates, check out all over the YouTube and Twitter. More exclusive content about what I'm personally doing can be found in the Discord. Other than that, I'll catch you in the next Hbar update. Cheers.